Hey everybody, Smart Silver Stacker here. Hope you're doing well. It's a very interesting day in the markets today. We have got gold and silver both rallying as the rest of the market comes under some significant pressure. Now, just to take a look here at the gold chart, courtesy of SD Bullion, you can check them out with the link down in the description. You can see gold up about $36 today, up to $2,023. Silver up about 1.69%, up to 25.57. And you can see it was a pretty rapid ascent here earlier in the session. Now, this is not a huge move in the metals, but what makes it notable is that we have got gold and silver rallying in the face of the broad market selling off pretty significantly here. As you can see, we have all of the major market indexes declining. And if you're joining right now, please do smash that like button. Give the channel a thumbs up. If you're not subscribed yet, consider subscribing. I'm sorry, but my software here, I'm streaming from the desktop today. I can't seem to get the window for chat to pop up, so I can't see the chat at the moment. I apologize for that, but I do appreciate all of you tuning in. And you can see here that we've got the S&P 500 down, NASDAQ all down fairly significantly. Oil down more than 5%, so that is very notable. The Russell 2000, so the one most representative of the U.S. market here, down 2.38%, while gold and silver are rallying. Bitcoin also up, so that's pretty interesting. Bitcoin trading like a safe haven today, not like a risk asset. And I know I can't see the chat, but everybody else watching can, so do me a favor, and I'm kind of curious, what do you think about Bitcoin as a safe haven? Because, you know, I've talked a lot in the past how it's really more of a digital risk asset, like a tech stock is typically how it has behaved in the past, but it's very interesting that it's rallying today on this flight to safety that we're watching. And that's exactly what this is, this move up in the price of gold and silver. It's a flight to safety. And the way you can tell that is that everything else is selling off. Now, sometimes gold and silver will trade with the stock market, and sometimes they move inversely to that. And it's those times when it's moving inversely, like today, that you know that investors are looking for safety. Now, it's not just the broad markets that are selling off. The real victim here, the real culprit in this decline is the U.S. banking system. You can see here, this is the iShares U.S. Regional Banks ETF, ticker symbol IAT, down 6.44%. And I'm really missing that chat right now. I'm not sure why. Normally with my software that I use, I get a chat window that becomes available, but just not getting it today, and I don't want to stop the live stream to tinker around with it, so I do apologize for that. But we've got the banking system selling off here, and so I wanted to do this live stream because this is breaking, this is happening in real time, and this is very notable. And one of the worst culprits here, Pacwest Bank Corp, ticker symbol PACW, down 24% today. This is as we have been reassured by the powers that be that the banking system in the U.S. is safe and sound, everything is well capitalized, everything is fine. Of course, then we get reports like the one we got out of Fortune, which tells us that the banking system is sitting on $1.7 trillion in unrealized losses. And we did just have the second largest bank failure in U.S. history in the form of First Republic Bank beating out SVB for that dubious distinction. And now we've got Pacwest Bank Corp dropping 24.37%. And you're seeing these smaller regional banks come under significant pressure as investors are scared, you know, rightfully so, I believe, that their deposits may not be safe. The idea being that if you are in one of these smaller regional banks, maybe your bank isn't big enough, you know, it's not too big to fail. Maybe it's not well enough connected politically to get a bailout or to make sure that all the depositors are insured. So certainly if you have deposits over the FDIC threshold of $250,000, which is technically still in effect, you probably want to get it out of these regional banks. And so there is, it appears, significant contagion in the financial system, and looks like Pacwest might be the next bank to fail. So that's definitely going to be something that we want to keep an eye on moving forward throughout the rest of this week. And this all did kind of kick off. Well, it kicked off back in March, with SVB and Signature Bank and their collapse. But it has continued to spread this contagion despite the best efforts of the Fed and the Treasury and the powers that be to shore up these banks, to bail them out in any way possible. Of course, they won't call it a bailout. They act like it's a free market solution when they have JP Morgan buy up the assets of First Republic Bank. But it's nothing of the sort because the FDIC helped finance that transaction. They absorbed a bunch of the losses, about $13 billion worth of losses, to sweeten the deal, to make it a viable transaction for JP Morgan. And we got the president here telling us the banking system is safe and sound. And that's what these steps are, that's why we took these steps, to make sure that the banking system is safe and sound. But of course, they have to do whatever they can to try to instill confidence in this system, because that's what's going on here. It's a giant con, it all depends on confidence. This whole thing is a giant Ponzi scheme. And we all know what happens to Ponzi schemes when they collapse. The people who are still left in the system really suffer as a result. They end up being the bag holders. And I think that one way or the other, the depositors in these regional banks are going to end up being bag holders. Now, possibly it's because the banks collapse and they lose their deposits. But even if the banks collapse, which seemingly is inevitable at this point, this cascading contagion shows no sign of stopping. But even if they get a bailout, everybody's deposits are going to be at risk then, and not in the sense that you won't have the money, but in the sense that the money's not going to buy very much, because these bailouts, if they are forced to extend to the banking sector as a whole, if the FDIC has to come in and recapitalize these banks and ensure all these depositors get all of their money, they don't have that much funding at the FDIC to make all of these depositors whole. They don't have $1.7 trillion sitting around. So where's that money going to come from? It's going to have to be printed. And so even if you get your money, there is a huge risk of the purchasing power declining significantly. And this isn't the only thing that is spooking markets at the moment. We just got this warning from Janet Yellen that the U.S. now could hit the debt ceiling by June 1st and run out of cash. That is earlier than previously expected. The reason? Because of a drop in tax receipts. So the government is not getting as much tax revenue as they expected. And that is what you would expect in an ailing economy. As the economy continues to devolve around us, there are so many factors that are going to be putting pressure on the federal government and federal spending here. Not the least of which is that as people become more impoverished, there's going to be less money flowing in the form of tax receipts. So how are they going to make up that deficit of tax receipts? Well, I think we know how they're going to do it. They're going to print, because cutting spending is not an option, seemingly. It's a political problem. There's very little political will to slash spending. And if you're in the chat right now, if you're watching this live stream, I do appreciate you tuning in. I'm sorry I don't have the chat pulled up today. That is one of the best parts about these live streams. I'll definitely have to make sure I reconcile that before I do the next one. But if you're enjoying this live stream so far, please do give it a big thumbs up. Help spread the word. Help get it out into the algorithm so that more people can be aware of what's going on in the markets today. Again, if you're just tuning in, we are seeing the price of both gold and silver not have a huge run up, but a pretty good gain today, up 1.79% in gold, up to $2,022. Silver up 1.55%. And the thing that really makes this significant is that we are seeing a broad sell-off in markets across the board, and the banking sector in particular is crashing here because markets are getting very spooked by what's going on. We got Pacwest Bank Corp dropping 23% today. Very, very ominous signs for the U.S. economy. And now there's not enough tax receipts to keep the federal government running as long as previously expected. And as the economy continues to devolve, as it continues to degenerate, as businesses close, we just saw Bed Bath & Beyond go bankrupt and close. That's a big retailer. Today, I saw Tuesday morning, another one of these household goods retailers is going out of business. They just declared bankruptcy. They're going to be closing all of their stores. And so as we see this declining amount of economic activity, we are going to see a huge amount of pressure being put on the federal government here. And don't worry, I mean, the debt ceiling is going to get raised. All of this political posturing to the contrary is all nonsense. They will reach an agreement. They always do. I mean, I suppose there's an outside possibility that they will allow a default to occur, and certainly that would be catastrophic. I mean, I don't think Yellen's exaggerating when she says how catastrophic this is. The only thing she doesn't mention is that the catastrophe will happen regardless of whether the debt ceiling gets raised or not. Because if it does get raised, that doesn't mean we're going to be paying our bills. You know, they always say, oh, you got to raise the debt ceiling so we can pay our bills. No, it's because we don't pay our bills, and it's because we continue to borrow vast quantities of money in order to pay for all of the spending. We are not paying our bills. Putting your bills on a credit card and shuffling around debt is not the same thing as paying your bills. Now, this is from the most recent Treasury Department report. You can see this at fiscal.treasury.gov. And just to give you an idea of how much the spending has already gotten out of control, this is for the first 6 months of fiscal year 2023. We're at a $1.1 trillion deficit. That is from October of 2022 until March of 2023. And you can see the net interest cost on this, not insignificant, $301 billion, but that is just going to go up for two reasons. One, the Fed is likely going to continue hiking rates, although I don't know, maybe if we get some major market crash between today and tomorrow, they'll have, you know, a different announcement for us at the FOMC meeting that's going to wrap up tomorrow. Right now, markets are pricing in a 25 basis point hike to be announced tomorrow. That's the expectation, about an 84.3% chance of that occurring, according to the CME's FedWatch tool. Still an outside chance of no rate hike, no pause. Now, I didn't really think that that was going to be a possibility. Typically, what the Fed has been doing is delivering what the markets expect, but witnessing the market action today and the new possible collapse of this Pacwest Bank Corp, they lost 23% of their share value just today alone. And that's a resumption of a decline that was already ongoing. I mean, maybe the Fed will decide that a pause is warranted. Now, if that happens, I would expect the price of precious metals to go up quite a bit. But the other reason that this net interest payment on the national debt is going to continue increasing is because not all of the national debt has rolled over yet. Now, quite a bit of it is financed via shorter term U.S. treasuries, and a lot of those currently still have the low yields that they were issued at. But as those continue to roll over, bond yields have gone up quite a bit from the past couple of years, and that means that there is still some increased interest payments to be witnessed, even if the Fed pauses right now. We're going to see this amount increase. And then I guess the third reason that this will continue to increase is because the debt is increasing. So, you know, more debt means more interest, right? Regardless of what the rate is. But we can expect this deficit to continue to absolutely balloon now that we are witnessing reduced tax receipts from U.S. taxpayers. And that is just a sign of the economic malaise which continues to plague the U.S. economy. And the reason that this is persisting is because the government has done nothing to address the real root of the problem. You know, hiking rates but continuing to spend lots of money, that doesn't fix the problem. All that that does is collapse the U.S. economy, which is what we're witnessing. That's why these banks are collapsing. If you really want to address the root cause of this, you've got to reduce this spending. Now, the spending cuts that the Republicans have posed in order to raise the debt ceiling, you know, none of it comes from these items: Social Security, health care, income security, national defense, Medicare. No, they're not trying to reduce any of that. They're trying to reduce this other category, you know, the incidental spending. They slash a little bit of this, but they don't want to touch the biggest items on the budget, and it's because it's politically not viable. Now, I know, listen, every time I call Social Security an entitlement program, people freak out. I know people paid into it. Okay, I get it. It's a Ponzi scheme. If you paid into it, you're getting screwed. Now, if you're currently collecting Social Security benefits, I mean, consider yourself lucky that you're getting anything at all. Myself, I mean, I've paid into Social Security quite a bit, and I don't expect that by the time I retire, I'm going to be able to collect anything. Or if I am able to collect anything, I don't think those checks are going to pay the bills. You know, they're not going to have any purchasing power. That's exactly what Alan Greenspan warned us about back in 2005 in congressional testimony. He said we have a system where you can guarantee cash payments, but you can't guarantee the cash payments purchasing power. And that's where we're headed. And we really need to cut Social Security. We need to cut healthcare. We need to cut national defense. We need to cut Medicare because we're broke. We're spending $1.1 trillion that we don't have, but there's very little chance that that's going to happen. And so what that means is that inflation is going to continue to increase. I mean, what the next CPI print will be, maybe it'll be a little lower, maybe it'll be a little higher, but in the long run, inflation is going to run out of control if we continue on this path. And there's no sign that this is going to change. And on that item is Social Security as an entitlement. I'm sure the chat is blowing up. I wish I had the chat available to me right now so I could see everybody's comments. It is an entitlement program in the sense that it's a guaranteed government benefit. I mean, when you look up the definition of entitlement program in the dictionary, it doesn't quantify whether or not people paid into that program or not. It just means that it's a program in which a certain subset of people are entitled to receive a payment. And Social Security falls into that category as much as everybody. I'm not trying to denigrate anybody who wants to collect their Social Security. I'm not lumping it in there with welfare or anything like that. I mean, you did earn the money. You did pay it into Social Security. The problem is that money has already been spent on other things. And so you're going to get checks, but the money is all going to be printed up. And very likely those checks aren't going to buy very much. And yeah, they're going to go up. I mean, they link the Social Security payments to the CPI, but remember the CPI drastically understates real inflation. I mean, there's a reason for that. It's so that the government can get away with, defrauding you of your government mandated Social Security retirement benefits. I mean, I think we'd all be better off if we could just avoid paying into Social Security completely. If there was an opt-out, I would sacrifice the 20 years or so that I have paying into the system. I would sacrifice all of that money gladly if it meant I didn't have to pay into it anymore. But that's not an option on the table. Leave me a comment or put it in the chat what you think about that. I can't read the chat right now, unfortunately, but I'm sure that I'll go back and watch it and be interested to see your comments. Now, like I said, CME FedWatch tool, we've got the Fed coming out tomorrow with their rate hike announcement. Seemingly, we're going to get a 25 basis point rate hike, but the markets are being kind of funny today, so we'll have to see what happens. If they do go with the pause, I think gold and silver are going to move up drastically. And then the last thing I wanted to cover was this warning from Ray Dalio. If you haven't read his book, The Principles for Dealing with a Changing World Order, it's very good reading, very pertinent to what we're witnessing in the world at the moment. And he recently came out with this warning. I believe he posted a fairly lengthy article on this topic on his LinkedIn. So if you go to Ray Dalio's LinkedIn, you can check that out in his newsletter. But he's warned that the U.S. and China are on the precipice of war. Now, I know I talked about this in the live stream yesterday, but I want to revisit this because, if this happens, there's going to be a lot of consequences, and it's going to directly affect the precious metals. I mean, I think it will drive the precious metals drastically higher for several reasons. One of which is something that Dalio talks about in this article, and that is that we are going to witness, as a result of these declining relations between the U.S. and China, an onshoring of industry, meaning you bring industry back to your own country, or friend shoring, which he's basically referring to moving manufacturing and all of these enterprises, if not to your own shores, but to the shores of your allies, so that you feel safer with that. And the thing about this is the deglobalization. This is, rather than industry looking for the cheapest possible, the most efficient possible way to do things, they're going to have to consider this geopolitical conflict. And that means it's not going to be as cost effective to do business, and it's going to lead to higher inflation in the form of higher prices. I mean, when you talk about inflation, you got to be kind of careful what you're talking about. You're talking about an expansion of the money supply. It's the real definition of inflation. It's the inflation definition that kind of makes sense. You expand the money supply, you get inflation. But interchangeably, price increases and inflation are kind of used these days. It's been redefined. But what I'm talking about is it's going to lead to much higher prices because the global economy is going to become much less efficient. And he mentioned that the next 18 months are going to be quite risky. If I can find the quote here. As a result of the political situation in the U.S., sorry for the scrolling. Here we go. Yeah, the 2024 U.S. election will worsen tensions, Dalio predicted. Politicians seeking re-election will likely try to keep pushing the limits with Beijing to appeal to the anti-China sentiment from voters, said the billionaire. And over the next 18 months leading up to the 2024 election, he seems to think that the relationship with China will continue to decline. And he says that it's not guaranteed that the U.S. and China will go to war, that China actually doesn't want to go to war. It's not really positioned itself just yet, hasn't gotten itself to the point where it's ready for a conflict. But with all the brinksmanship and the red lines being crossed, it's possible that there could be a miscalculation and we could see a significant ramp up in the conflict. And then also he mentions Saudi Arabia engaging in new deals with China and Russia. That is Saudi Arabia's propensity now to join the BRICS organization could have some significant impact on the global economic situation and also this potential for conflict with China as well. And that goes to that friend shoring kind of idea. If China feels like it needs China more than, if Saudi Arabia feels that it needs China more than the US, and it's very likely that that's the case because China is the biggest consumer of Saudi oil, geographically they're closer, they have deepening strategic ties, deepening military ties, and now, Saudi Arabia wants to join the BRICS, we're going to see a real fracturing of the existing global order. We've had the petrodollar system, a strong Saudi-U.S. alliance for the past 5 decades plus, and that may be coming to an end very soon as well. And it's just one of the hallmarks of this sort of fourth turning period that we find ourselves in, that existing relationships are overturned, new relationships form, new alliances are created, and all of this is likely to increase the safe haven appeal of both gold and silver, monetary assets that have served as stores of value for thousands of years. Investors, looks like they're beginning to get the memo on that today as we see the price of these metals popping in the face of a declining overall U.S. stock market and these regional banks in the U.S. coming under significant pressure. I mean, Pacwest Bank Corp, again, down 24%. This may be the next bank to fold in this environment of spreading contagion. And I don't think this is over yet. I don't think that JP Morgan buying up First Republic Bank solved anything. I don't think any of these bailouts have solved anything yet. And if we see the Fed continue to hike rates tomorrow to try to get this inflation, which still remains elevated, under control, very likely we're going to continue to see more and more banks collapsing. And all of this is very ominous for the U.S. economy. So I'm still stacking precious metals. Sorry I couldn't get in the chat today, everybody. I do really appreciate you joining. I'll make sure I fix that before my next live stream. And if you enjoyed this video, please do give it a big thumbs up, subscribe to the channel, and I will catch you next time. Thanks for watching, everybody. Smart Silver Stacker, out.